control the flow, and I'll
Hey
pitch in
guys,
wherever I can.
we are live now, joined by TJ the Will Deal. I just put his X, oops, that's not it, on here. So if you want to follow him, if you don't already follow TJ, especially if you're interested in options trading strategies, TJ reached out. Of course, he and I both saw the news on PayPal. I am not in PayPal. I do see some questions on, am I thinking of getting into PayPal yet? No, absolutely
What the
not.
heck is going on?
But I do know a lot about the company and business, and I'm excited for shareholders. And so TJ and I were talking. We're like, hey, let's just pop on. We'll keep this, kind of shorter today at an hour or so. And we're going to talk some PayPal. We're going to talk some SOFI. We're going to talk some BMNR, maybe a couple other things too. Before we even got started, we were talking Palantir and other things too. So TJ, how are you?
I'm well, man. I appreciate you taking time out of your life, Roy, to educate me, right? For all intents and purposes, you've been my quant on on PayPal, unbeknownst to you. Well, you kind of knew, but I rely on people like you, people that I know and trust personally. The Tevises of the world. Obviously, Amit comes with all the information.
Oh yeah.
We certainly in the SOFI community, we miss freaking Chris, right? We miss him
Oh, yeah.
so desperately. It's awesome to have access to people that know these companies a lot better than myself, because that is not my forte. My forte is to take a ticker and figure out how to make the most amount of money with it. That is what I'm good at. If you want to know how to make money off a stock, I'm your guy. If you want to know all about the company, Roy's your guy. You know what I mean? I don't know enough about some of these companies. Now we're talking about SoFi. I've been following it closely since it was IPOE. So I can hold my own on SoFi. I can hold my own on the riots of the world, but that's about kind of where it stops. Tesla, I'm pretty well versed on Tesla, and then in Palantir, I actually know a lot more about Palantir than I lead on, but I just don't know how to nerd out like some of you guys. That's just not my thing, right? I stay in my lane. So I appreciate you taking the time, and I know you're busy. You got a beautiful family. You've got a thriving career. I know you're pursuing PhD, LMNOP, the whole thing, right?
Hopefully done with that next month. It's defense is coming up. It's scheduled. So yeah, I've said no to a lot of things between now and then. I'll have a little bit more time afterwards. But TJ, appreciate you joining in here. Yeah, TJ is a good friend, good guy, and he talks about manufacturing the win. Selling options is his main bread and butter, and he does that very well. I'm going to let you choose, because you're my guest here. Where do you want to start with, BMNR, SoFi, or PayPal?
I think let's always do the bad news first, right?
Yeah.
There's something that raised my eyebrows. If I could do the rock, like the little, how Reed does the little thing.
Yeah.
There was something, I guess the CFO made an announcement on X or wherever it was that she was going to be speaking somewhere in New York in a week or two. And then I just came across your, it just says RIP, RIP, PayPal. I don't know if that rings a bell or not. And then I try to click oh shoot, because I have a huge position to buy, an obligation to buy a lot of shares for us at $50, a couple years down the road. So it didn't really set off a lot of alarm bells, but I didn't know if you were being funny, because every time this lady talks, the stock tanks.
That's it.
So I was like, I need to know what's going on, because I know this. I know you sold your position, but I feel like I also know this. You're kind of still giving it the side eye.
Yeah, I'm not looking to get back in. But I mean, when you invest that much time into a company, into an investment as well, you still are I'm kind of curious how it works out. Now, it's just to be honest, human nature is, well, I hope shareholders do great that are remaining, and you guys that are in PayPal, you deserve to. You've suffered long. I suffered right there alongside you. I got at 45 and some change. So about really where it's at today. But also part of me hopes it doesn't do too good. If it does the 5X, and I'll be like, oh man, I don't think it will. For me, the thesis broke, and my own rule is when the thesis breaks, I get out. I look for the exit. Now, sometimes it's not looking for an exit immediately, but it was clear during earnings that thing was going to tank. They're moving away, from Alex Chris was a big part of it.
Yes.
And bringing in a guy that's a cost cutter, I mean, they needed that, honestly. And Alex he honestly should have done a lot more. But yeah, so today, like it moved substantially and, got my attention. A lot of people were tagging me and different things. And the nice thing about the PayPal community is we've all been beat up so much that we don't shoot our own. We don't beat up people that have exited. Like, we get it. And I'm on the sidelines on this, but yeah, the rumor was that PayPal is actually feeded more than just a rumor. It's a Bloomberg article that came out that said PayPal had entertained multiple unsolicited offers.
Right.
And offers what at least what one was from a rival that wanted the whole business. A lot of the others may have been for parts of the business. So perhaps Braintree, for instance, for payment processing, or Venmo also is probably their most attractive asset, honestly. Both of those were acquisitions in 2013 under Dan Schulman, and both have done well. But so the price spiked, of course, ended up at 45 and some change, about a 10% move there. Let me ask you first, TJ, what were your immediate thoughts? And I'll give some of mine as well, and then we'll talk in just a bit about how you're playing this.
My immediate thoughts were, why did I have to go run an errand whenever that happened? Because I could have closed 4,500 naked calls at $45 for 24 days out. So it went from being up 30% on the naked calls to being down over 200% immediately. Now that's the bad news. The good news is all the puts were recovering. So the deltas were balanced out. So it was like, oh, but then you look at it and you're like, oh, kind of a nothing burger, really, because I could just roll these naked calls and eventually the news is going to either be real or not real. And I'm just not able to realize those premiums in 24 days. It's going to take another 2 or 3 months. So that aspect wasn't really that big of a deal. It would have been nice to be in front of my computer when it was happening. And then I could have just maybe lost, because I had sold the calls as a hedge. Because it's like, everybody's oh my God, why you sell calls? It's because I don't like to buy puts. I'm a bull. But because if you buy puts, you need the stock to go down to make any money. Yes or no? That's how it works.
Yeah.
So if I sell calls and the shares go down, those calls print. If the shares goes up, those calls don't print. You know what else wouldn't have printed? The puts that I had bought. So in my mind, it functions kind of the same way, except the naked calls have an unlimited risk to the upside. Whereas when you buy puts, the only thing that you could ever lose is the premium that you pay for those puts. So those are the gimmies and the gotchas in a nutshell. So when you see me selling a bunch of naked calls, understand the context as why I'm selling them, because it is my version of buying puts, because it's just real hard for me to buy a put. It's like something in my DNA that does not allow me to do it. So I have a different way of hedging that's non-traditional, but I also have a lot of non-traditional results, if you know what I mean.
Yeah.
So that was the thing, man. I was just like, okay, got caught my hand in the cookie jar a little bit, but I was able to roll out to the 81-day cycle, moved it up to 50. So right now it's a nothing burger. But now I wanted to see if there's anything that's come out that, because I'm sure the rumor mill is going crazy, right? The grapevine's going crazy. People like to infer and speculate, and it's like they turn the stock market into a soap opera. So do you know anything? Has anything come out, or are we just kind of playing the waiting game right now?
It's the waiting game, like who it is. So there's 2 things that we can look at. So one is the rival that's in, if you look at rivals, like the interesting thing is if you look at Block, if you look at Adyen, even if you look at Stripe, which is private, for some of them, it's like there's too much overlap. It wouldn't make as much sense. And they're also smaller, even now, than PayPal. Like Global Payments Network, same thing. So obviously, a smaller company is not acquiring all of the larger PayPal. That wouldn't make a lot of sense. I mean, it's theoretically possible, but no. I mean, no company would do that. A merger, possibly, but that's not what's being talked about. The only one that really makes sense as far as the entire grab of PayPal, unless it's let's grab PayPal and then we're going to sell off the parts later, would be actually JP Morgan Chase. They are sizable. They've been moving into payments for quite a bit. PayPal would work well in their ecosystem. I don't know that it's necessary, but honestly, like that's what's happened with PayPal is the valuation just crashed And so they've had multiple people that seem like that they've approached since that earnings call and since that crash, not before, with offers. The meeting with the banks, by the way, that basically is that happens when the offers are credible enough that PayPal or other companies that are going through this process go through like a Goldman Sachs and Morgan Stanley. You know this, but I'm explaining it for the viewers, just to make sure like the valuation makes sense, look at the terms, the agreements and everything. They're always there to help on the back end of that. So with this report coming out with the word multiple, with where the valuation is, I think that there's credibility here. I think it's less likely that the entire thing gets bought out, but there's a possibility. If it does, traditionally fintech, and it depends on the macro, it depends on the strength of the company, it depends on if there's multiple bids or not, but usually it carries a 30 to 50% premium before the rumors were actually begun. So we're looking at a price maybe between $52 and $60 a share if it's an entire buyout. Now, a lot can change between now and then. We could see the markets actually start to go up for payments and other names. It was the opposite today. So really PayPal's strength today was pretty incredible. And if there's multiple solicitors for the entire business, which it sounds like there's just one, that can also bid up, or even if they're just trying to bid up certain parts. I think what's more interesting is who the ones that are soliciting PayPal are for different parts of their business. So one that I think makes a lot of sense is either Google or Apple. I don't think that they'd acquire the entire company, but Google Pay and also Apple Pay go to third-party payment processors. Braintree is one of three. It's a triopoly. And so if they acquire Braintree directly from PayPal, the white label payment service processing, they all of a sudden can run all of Apple Pay or all of Google Pay, or at least most of it, just in-house. And so if you look at the valuation where PayPal was before the rumor, and you look at how Braintree is a part of that business, you're maybe looking at $8 to $10 billion to acquire something like that. That's nothing to an Apple. That's nothing to a Google. Meta could also be involved. There's other names that could be involved. It's
a $41 billion market cap. Truth be told, they could stroke a check for the whole thing. And it wouldn't really even disrupt their balance sheet very much, which is kind of crazy. That's how solvent those companies are.
And how much PayPal has fallen, frankly. So if there's a bidding war, we could actually see a higher premium. And also the other thing that happens, that sometimes happens, these like Bloomberg publishing that is not coincidental. Sometimes a company will do that as well, basically to say, hey, we're entertaining offers. So if anyone else wants to make an offer, now's the time. And sometimes you'll see a rival step in where they're like, oh, so those guys are going to make a move on PayPal? Nuh-uh, we got to prevent that. And that's where it can actually get really exciting. You can see that higher premium. So could you see higher than, like if the entire thing's acquired, higher than 60? It's possible. I wouldn't say it's super likely. It's not the base case scenario, probably around 55. But that's higher than we're at. And honestly, like the thing is, I think a lot of the people that are on the board in the company and also shareholders, they just want out, man. So I don't know that they're going to, say, no, we're going to suffer through years of buying back our own float and underperforming the market again. So I would guess something is probably going to happen. This can take time, though. How
long do you think it takes for a deal like this to consummate? First of all, this Express Investing gave you $5, which is great.
Yeah. The 2750 offering, who brought and can they sell, or how long do they have to wait and sell? I guess I'm not quite understanding. Just put in the comments. Don't donate again. Thank you for the donation. What you're meaning specifically by the 2750 offering, and what company? Because we're talking three different tickers. So, or you might be talking about a different company as well. It's usually a while. So there's several things that happen. Like the meeting with the banks means that this is not something that just happened this week. It's something that's probably been happening since the earnings call. And it's usually in a business like PayPal, especially as complicated as this could be, where you have some that are whole offers, you have others that are, we want this part and this part. That can take a while. It would surprise me if a deal gets done before the next earnings, but it certainly could happen, especially if there's a deal that's good enough and somebody is stepping in. And then after it's announced, of course, then you have to wait for regulators. So the good news is the current regulatory environment is more friendly towards mergers and acquisitions. Part of it is the disruption that's kind of happening in the space anyway. I would guess that something probably does happen here. beyond like JP Morgan Chase, I'm not sure what company would swallow PayPal whole unless they were going to spit out some of the bones and sell that on the other side. So could be wrong though.
I hear you. Well, I appreciate you adding some color to that. I'm so thankful that I do have the naked calls on for us, even though they did cause a little bit of pain there. But I think that it'll definitely. I think 50. I feel pretty good about 50. I'll feel better on the next round if I'm able to get to that 55 or 60, because I do feel like PayPal would be like, hey, we've done a lot. We want to get 55 to 60. I just feel like if I'm trying to sell the entire package, I'm probably going to start at like 70, and then, they'll have a Chinese auction, and then they'll probably end up right at 60. I just feel like it's a nice round number for the entire company, which would probably put it in the neighborhood of a $50 billion, give or take. I'm just trying to do the napkin math.
Yeah.
Not as good at it as you are.
It could be north of that too, but I see some people putting out like this is a double from here, and I don't see that. This is not a business that's growing rapidly. It's one that's distressed, and the current macro is also distressed. Unless you have a bidding war, which it doesn't sound like that's the case, that'd be difficult. So Dane asked, what would happen to the stock share price if a company buys out only part of the business? I mean, it depends on the details, but I mean, SoFi or a PayPal rather, like if they're selling Venmo versus like selling their entire suite, they would get a premium probably additionally or higher than what Venmo would be valued at. Venmo is very attractive. I think Braintree is attractive to some too. Venmo could be acquired by just about anybody. It's a burgeoning business. It has a lot of potential. There's a lot of things you can do with it. It's made a lot of.
What do you think it's worth on the open market? Between 10 and 20 billion?
Yeah, probably worth. It's probably about $10 billion, and then you're paying what a 30 to 50% premium over that. So it could be $13 to $15 billion on its own. That's probably beyond like PayPal branded. The best thing about the business, Braintree, it does more volume, of course, but they managed to pivot Venmo. It'd be kind of interesting though, because PayPal did this pivot under Alex Chriss, which was good for Venmo, where Venmo, even though it was bought by PayPal in 2013, used to compete with PayPal, which was like classic Dan Schulman, just terrible leadership. And they fixed that and they resolved that. Well, if they sell Venmo, all of a sudden they're competing with Venmo again, unless they have an agreement like, hey, don't do Venmo Pay anymore. We're going to just do PayPal branded. You focus on the user-to-user experience instead, or maybe the business side of things. But we'd kind of have to see. But yeah, the sum of the parts is worth more than the whole for PayPal, I think, unless there's a bidding war here. So, but yeah, the stock price, even if they just sell part of it, they'll get a pretty nice premium over whatever that part is. Of course, it depends what they use it for. But if they're like, hey, we sold Venmo and the stock price isn't moving, we're going to accelerate buybacks to $15 billion, then the market cap's at 40.
Yeah.
The market might like that. So I think it'll be accretive to shareholders either direction. But there are a lot of things that they have to be thinking about, because what Alex Chriss was building, and this is why, by the way, I exited, is I'm like, I don't know that they're going to stay the course with his vision. And if they don't, I don't like it. I don't think that there's much of an opportunity barring something like this. But I don't invest for buyouts or short squeezes or anything like that. If I'm holding something and it happens, hey, that's great. So
just one more question, because I know the divorce is fresh as far as with PayPal, right? Not to use, that terminology, but do you think they gave Alex Chriss enough time? Because you've had time to really mull it over now, because I was a fan of the dude. He came on your channel. It was an amazing interview, I thought. And I just feel like he needed another 6 months to a year, because PayPal is a really big boat and it takes a while to get everything going in the right direction. And I feel like he was trending the company. So whenever he was, the replacement was announced, in my mind, I was like, there's a merger and acquisition that Alex Chriss was not on board with, and that's why he was ousted. Like that was my conspiracy theory, if you will. Because they didn't really give a warning sign, right? It was announced during earnings, right? Like I had no idea that was coming. I don't think you did either.
No idea. I mean, some people had speculated on it based on the share price. In that quarter was a disaster. You look at guidance; they're guiding for negative EPS growth despite buybacks, which is, it's a kitchen sink type of earnings where a new CEO comes in and they want to make sure they'll hit the target, so they make it even lower than the typical soft guidance. But even still, boy, that was shocking. So I don't think that they gave him enough time. When Alex Chris came in, I think most of us shareholders and Alex too was expecting that it wasn't in as bad of a shape, but internally there were all kinds of issues and problems just because Schulman was such a terrible CEO, like especially the last 3 years that he was there. He was very good in the beginning. I'll credit where it's due. I'm not saying everything he did was bad. At the start, he was great. But when you have a juggernaut like that, when you have an ocean liner, it takes time to do your pivot. You're not just a very agile business anymore, especially when it's so moribund like it was. So I don't think that they gave him a fair shake. I think that they should have probably given him another year or two. Now, if the board was like, hey, things aren't working out, we need to entertain mergers or acquisition offers, we need to make more cuts and be aggressive, I would have guessed that he would have been open to that. But, ultimately, we don't know what happened other than what we're seeing now. And it is possible, like to your credit, that the mergers or the acquisition offers were happening even prior to his departure and prior to the earnings. But I think it's probably more recent, which is kind of also why we can pin the valuation on PayPal, barring multiple bidders, of not being like the 90 or $100 a share that some people have floated out there. Instead, it was already attractive going into earnings in the 50s. All of a sudden it hit 40 and change, actually even lower than 40 briefly. Now it's at 45. So either way, whatever happens, it'll take probably months to play out, maybe a quarter or two. You'll likely hear more rumors when it gets close. Oftentimes you'll hear, oh, this company is the one that's actually doing that. Sometimes they leak that intentionally. Sometimes it is just, people get excited and they like to talk. So stay tuned. It'll be interesting to see how it plays out, though. And for you, you're just rolling your calls out, holding into your puts. You had some.
I have the puts are for. Hold on, Mike. Let me look. Let me look. I'm looking in the background. So I've got 2,500 put, 662 days out at $50 that I'm underwater on because I rolled them. I was at 50 the whole time, but I did a lateral roll. So I rolled from a position of weakness because it's when it tanked like 25%. So I carried a negative equity north of $1 million on those. And then I've got about 800,000. I've already made 400,000 on naked calls. And then I've got another 800,000 hanging in the balance. So that'll offset all the negative equity from the short puts. So I would essentially be break even in 81 days if PayPal stays under 50. If it doesn't stay under 50, then I'll have to roll again on the naked calls. But eventually I have to capture that premium to be clean if PayPal stays at these levels. So what I'm looking to do is trim the puts from 2,500 contracts to at least 2,000, preferably 1,000. And I've already started, and I think this would be a good segue. I've already started my new position that's basically me saying to do one of those videos that says I was wrong, right? Because they do real well on YouTube.
Yeah, they do well.
Like, I was wrong. I'm team SOFI. I've made the most amount of money on SOFI. And I said, hey, SOFI, can you go get me some of this PayPal money back? And I sold 2,500 puts on PayPal today and hauled in almost $1 million in premiums at $15 for the same expiration date that I have on PayPal. So essentially, if I had to take an L on PayPal, I'm basically saying PayPal at 50, SOFI at 15, gun to my head. We don't even have to think about it. I'm going to go with SOFI because I just feel like we got a company that's going this way and we got another company that's going in circles. We don't know what's going to happen. There's a lot of uncertainty and doubt there, a little bit of fear as well, a lot of FUD with PayPal. And I feel like SOFI has everything, the wind at their sails for the first time in the history of the stock. What did you call it? Confluence or whatever. They're ready to run. And I feel like SOFI's floundering because they don't know what to do without any adversity. It's hilarious to me. It is hilarious to me how disrespectful the market is being.
And I do want to talk SOFI with you here in just one second. One more question I saw from Matthew. Do you think this stains Alex's image as a CEO for potential other companies? I mean, yeah. When you get let go, especially when it's as visible as it was, you saw the underperformance. I don't think, certainly Alex is a CEO. He is partly to blame. I don't think it's all his mess to blame him. I don't think they gave him a fair, complete shake. He will land on his feet, though. He is brilliant. He had a ton of success at Intuit. He understands small and mid-sized businesses. He has a lot of connections as well. He might take a year or two just to spend time. I know he's married. I believe he has kids as well. And, he may just say, you know what, need a little bit of break. Let me just enjoy life for a little bit. But yeah, there's going to be companies that want Alex for sure. So he'll land on his feet. He'll be just fine. And when he does, I hope to interview him again. So, but we'll have to see what that opportunity looks like. So SoFi, are you surprised that we hit the 17s today, TJ?
Yeah, because it's a critical level for those of y'all that may not know. I feel like there's a lot of educated people on your channel. I recognize a lot of the names in the chat. SoFi has to maintain a threshold, to a market cap threshold, to be to qualify for entry into the S&P 500, and they fell below that threshold today. I think they ended up above the threshold. I don't follow the price action as closely as some people would think, because I normally don't have anything expiring right away. Like, that's just not the game that I play. I don't play doomsday expiration Friday. It's just, that's a losing game that your gamma's just going to crush you and Vega's going to crush you. Yeah. So it doesn't, I don't follow the price action on a day-to-day as closely, but I did see some of those rumblings on Twitter that SoFi is below the market cap threshold for S&P inclusion. So I do think that is something that management is mindful of. I know that there's a period that Anthony Noto spoke of on Tanner and Tevis's interview, that they can't really do anything as insiders until March the 1st, provided that there's not some impending talks of mergers and acquisitions. And he talked about skating in the middle of the pond, and he used this analogy. So I'm thinking that the catalyst for SoFi is going to be Noto buys a shitload of shares. And then it's like kind of giving us the roadmap. If he's able to. If he's not able to, then what are you going to do?
Yeah. He might have material non-public information, in which case he cannot buy even if he wanted to. Now, on that, like a couple of things. So one is, when he had the interview with Tanner and Tevis, if you guys are SoFi shareholders, you've not watched it, go on either channel, watch it. It's great. He's asked a question very directly at the end that a lot of CEOs would not answer, but I appreciate his candor. On basically whether or not SoFi was a buy here, if he'd be buying as well, because he's bought in the past. And he basically said as directly as he could, yes, that he couldn't until early March. And if there's material non-public information, he couldn't either. But yeah, he'd be very interested in buying. And where SoFi was trading, I think it was $26 a share back then, $25. Yeah. It's now 17. So if he thought it was a buy then, boy, it's really a buy now, because the business has not changed. The macro hasn't really changed much. Anthropic is not going to suddenly eliminate the need for loans or banks or something, although it's killing a business every day, it seems like. At least that's the narrative. So I think that it's likely that he'll probably buy back the stock. And to your point, that may mean the difference between getting in the S&P 500 now or later. They will get in eventually. Market cap threshold is actually 22.7 billion. Right now, they are at 23.25 billion. So just barely ahead. If we fall under about 1650 or so, they'll actually be underneath that. Now, back in quarter one and quarter two of last year, the S&P 500 actually included 4 names, and 3 out of the 4 were just barely over the required market cap. So being barely over still counts, and if they want to add them, they absolutely will. Being under, though, it means that they won't be able to make it. And so if Noto were to buy, if you're able to buy, it's probably going to be a sizable bid before that entry, just to perhaps prop up the share price and get in the S&P 500, which will help the share price. Long term, it doesn't change the thesis of the company at all, but short term, it can at least provide a local bottom. I think it's more likely than not. I'm not playing it personally. I'm just being careful with covered calls. So I think SoFi is way undervalued. I didn't even sell any the last few weeks, because I'm like, hey, if they get in, if Noto buys, we could see it pop back up for a while. And there's people that are saying single digits, TJ. Now, one of the things, I don't do as much, technicals as many people. Sure. But if you look at the weekly RSI, so relative strength index, it's considered oversold under 30. Yeah. We're at 32 on the weekly. rarely does SOFI, and I think I can pull this up here. We have RSI on, and I don't want to do legend because I need to replace this potato after my dissertation's done. But if you look at the RSI chart on the weekly, it's anytime it gets close to oversold, it tends to bounce. And that's most companies as well, not just a SOFI phenomenon, even if it's just a dead cat bounce or a local bottom. Do you see any scenario out there that's more than just a black swan event where we see SOFI in the single digits this year, TJ?
No.
Yeah.
I mean, that's the thing, right? This is what's unique about me. My position tells you how I feel. Right? There's a lot of people that just hear and jibber jabber about stocks, but I'm like, show me your trade and I'll know how you feel, right? I'm gonna show you how I voted. We vote with our wallets. We vote with the trades that we place. It's like I see all these people. Oh, it's going to this. It's going to that. Well, show me the puts that you bought if you're so confident. So that's just fireside chat. I call it, bullshit, right? I mean, just calling a spade a spade. I don't like to use that kind of language because I know who you are on a personal level. But what I'm saying is I call BS whenever you're just throwing out a bunch of silly price targets that are not substantiated by a trade that you hold. So I just made an agreement with Mr. Market to buy 250,000 shares of SOFI at 662 days from now. So it tells you everything that you need to know about how I feel.
Yeah.
And I was also compensated pretty well, right? $370, $80 a contract. So $3.70, $80. So you take the 15, you subtract the 380, it puts me at about 1120 as a break even. So I don't think the SOFI is going below 1120.
Yeah.
And if it does, I will potentially roll that contract down from 15, add another year to it when the time comes, if it comes. But that means that we got bigger problems. If 2 years from now, SOFI is not at least at 15, that means that we not just a recession, potentially a depression for all I know, right? But I would be looking to take ownership, if not at 15, at 1250, because then my adjusted cost basis would already be below 10. And I just feel like I could go all in. Give me SOFI at 10. I'm already all in on the 401k. It's just nothing but SOFI. And
I see some.
I'm probably selling watches. I'm probably selling wife's purses. I mean, at that point, I'm like, okay, this is a generational opportunity for myself. This is the ticker that I've already made the most money on in my career. And it'll just probably be forever that ticker if we were to get these prices again. I would transition. I mean, just calling a spade, and we're going to transition into BMNR. We got 120,000 shares of BMNR. I would dump those shares for SOFI, because give me BMNR at 20 or SOFI at 12. I'm going to take SOFI at 12 because I see a for sure double versus with BMNR. We have the Clarity Act or non-Clarity Act right now. And there's a lot of catalysts that are going to happen. And when it happens, it's going to be really, really quickly. But with SOFI, rate cuts, S&P inclusion, and Anthony Noto at the helm, that isn't just throwing out a bunch of crazy price targets that are not substantiated in reality or based in reality. That's my guy, that's my guy. Like, I could rock with him. He hasn't failed this yet. All he's done is deliver some crazy CAGR, some crazy growth, every metric is positive for SOFI.
Oh yeah, like imagine if they missed, or if they did an equity raise right after their earnings. Like that would have been like a bloodbath. And we could see something like, what others are saying, where it's like it's going to fall to 13 or such. Real quick, I don't want to forget this. Express, thank you again for the donation. The equity raise is over. So they've done two. They did them both last year. One at the beginning of the year. Kind of surprised me a little bit. I thought that they might hold off just because it's not, even though it's accretive to the business, it's not accretive to the immediate share price, which they have the volume weighted average that's necessary for those PSUs at 35 and 45, which there's pretty much no way they're getting those. The 2750 offering, that has been completed. Usually when an offering is announced within a week or two, they usually announce that it's completed. They did. And they'll usually announce that it's upsized. And within the SEC filing at the time, I believe 8K statement, they'll always say like how much it can be upsized if demand is there. And so they hit that in full. And so yes, that's That's over, who bought institutions for the most part. Like you can look at, of course, the 13F filings to see who has been acquiring more and who's been selling some. A lot of that's ETF action too, but there are some that actually stand out as far as what they've bought. Can they sell? Sometimes there's a lockup period. I don't remember in the filing there being a lockup period there. If it was relatively short, but double check that in the SEC filings. There's a lot of apps where, and I think maybe the SEC even has this, where you can ask questions. And actually, whether it's Gemini actually does a little bit better these days, or ChatGPT, if you see something, just screenshot it, put it in there. They do a pretty good job of explaining, like, okay, what does this clause mean? What does that clause mean? Yeah. Ask two when in doubt, when it's something you don't know. If you get the same answer, it's probably right. But I think that's pretty much a resolved event, except in shareholders' minds. Some are still mad about the dilution, which is funny because if you guys remember, I don't know if you remember this, TJ. I was like, the first dilution that they did, I'm like, this was dumb. It was the wrong timing. It's not great optics. And all the SoFi shareholders were like, no, except for Chris, Data Driven Investing. He had my back, but everyone else is like, no, you're wrong. And then this next one hits at a much higher level. And I'm like, okay, I'm fine with that one. It didn't really halt the stock price momentum, much higher, easily accretive. And I feels like I'm on the wrong side of this every time, that most shareholders are like, no, this is terrible. I think it's just because there was a second one and they didn't expect that. So the silver lining of all this, though, TJ, I would prefer that it's opposite, that we were like $40, $50 a share. But the silver lining for us shareholders is there's less dilution because of this. They're not going to dilute at this level because it's not accretive, and they don't need it, frankly, because of the cash. Second, the PSUs that would be given based on performance of $35 and $45 levels, there's pretty much no way those get hit. Volume weighted, so silly things can always happen, short squeeze and market euphoria and stuff. I'd put the odds at less than 1% of even the 35s and less than 1 in 1,000 for the 45s at this point. So that means that they will not get those rewards. And as a result, there's less dilution in the stock as well for shareholders. So that's a silver lining. That it doesn't mean it's fun times or anything like that. And for myself, I've added, even though it's above what I usually allow myself to add to companies, I put it in the swing bucket. Once we get to the other side of whatever this is, however long it takes, I'll have to reduce the position some, but I'm not going to do that here. If I didn't have a position, I'd be adding greedily, but I just can't right now. So are you doing anything different with your SoFi position beyond? So you've written a bunch of cash secret puts for a couple
of years. That was just today. I did not, in the big account, I did not have a SoFi position before today. Okay. Last year it was my biggest winner, like it seems every year. But they just had to know my story. I've been in the stock market since 1997. Yeah. So I've seen a lot, man. I've lived through the .com. I was invested in Enron, MCI, WorldCom, the great financial crisis. Like I lived a lot. I've lived through a lot of it, and I'm still here. I'm still here. Been selling options full time, going on my 6th year after I finished my career in the oil field. So I'm not a fly-by-night guy. That's why when people look at my temperament, oh my God, you're down $5 million. Oh my God. I'm like, no, oh, you're God. I'm fine.
Yeah.
Like I'm going to be here for the next 30 years if God gives me health. Like today's price action, I ain't going to think about it 5 years from now, so I'm not going to let it affect me too much today. That's just my approach to the stock market in general.
I did see, some people say that, hey, rich people don't give out information, and but TJ gains and loses more in a day than I have in my portfolio. So he is who he seems to be. I'm not as transparent. I'll share buys and sells. I don't share my sizing or anything. But it's a I'm not. It's not a million portfolio. It's under that, but it's also not a it's not a small amount either. So you can figure out and do the math. But yeah, TJ, his sizing is substantial, and he shares it. Like he shares screenshots on everything. I know they can be faked, but I know TJ personally, and so yeah, he is who he says.
Oh, I also trade live, so you can't do that. fake.
Oh yeah. Yeah, I mean, like,
the screenshot's one thing. I trade live 3 to 5 times a week.
AI is not that good yet. Maybe in a few years, but as to this question, this is a good one, Matthew. Will they get another vote for PSU? Yeah,
Probably.
Usually, thing is whether they earn these or not, it's going to be like Elon Musk with the PSUs and RSUs for Palantir. All companies that have some sort of shareholder package or share package for their C-suite, they'll have another one. It may look a little bit different and not be tied to share price. Whatever it is, I just hope it's accretive to shareholders. Like, as long as their interests are aligned with mine, I'm very happy with that. And as always, like, that's typically floated then to shareholders that usually they'll reserve it for the annual meeting, which would be this summer. But I expect that we'll actually probably see information on a new package and then we'll vote on it as shareholders. And if it's not something where I think that their packages are in alignment with shareholders, I'll call it out. That's one of the reasons why I think Noto didn't have me on the interview is, I mean, I say it how I see it on SOFI. And in the past, I've not always been like, yeah, they're perfect and everything. And I'm not saying Tanner or Tevis have been, but I've been probably a little bit more pessimistic out of the three, especially towards one C-suite member. So it is what it is.
I would say obviously you, but even more so than you is Steve. Like, half the time I wonder if Steve even owns shares. You know what I mean? Like, he's so angry at SOFI, but at the same time, this dude's so smart. Like, Steve's wicked smart when it comes to the stock market. He just sees the opportunity, you know? Yeah. So he's one of those, like, I don't have to agree with everything, but I know that there's an opportunity here to make a lot of money, and Steve has a lot of time on his side. Like, he's very well paid for what he does on a professional level. And he's not a fly-by-night investor. The dude has a wealth of experience. He knows how to make these spreadsheets dance like no other. He knows numbers, man. Like, Steve is your numbers guy. And he's like, there's a huge opportunity here. And he believes in Anthony Noto. I think he coined the phrase, "In Noto we trust." The only time that Noto has puzzled me was with this latest dilution. Without an immediate announcement coming after, like, hey, we did X, Y, and Z, because the other times that SOFI has baffled me a bit was they'll do things, and then we need the Roys, the Tevises, when data-driven investing was around, to make like 10 videos to make sense of the math. And I'm like, why does SOFI make it so damn complicated? That is one thing I don't have a hat on. I usually do. Hats off to Robinhood, because they make things very investor friendly. Even I throw things out to where even I can understand it. You know what I mean? And I love it.
Yeah. That's been probably my biggest consistent criticism is their communication has been insufficient. And especially when, like, literally you're on a fireside chat with their Chris LaPointe, their CFO, the day before the equity raise, and he asked very directly, like, hey, what are your guys' thoughts about the raise or about a future raise? I'm like, oh, we don't need it, you know, optionality, this and that. and fair, like, but don't, you know, you could say, well, you know, all options are open. We're not taking anything off the table. You can't announce it before it's been announced. And then when they announced it, like, optionality can mean anything. So they did a good job in the aftermath. I think that they realized, like, dude, you cannot treat shareholders this way and just leave them in the dark and say, yeah, we just wanted the money because, well, it'll be accretive. And it will be for sure. But I think that's one of the reasons why they brought Chris on. They realized that, yeah, they have a weakness. It's not a fatal weakness of communication that is hurting them quite a bit. And so they brought him in. He's brilliant. He's very good at communicating too. I think if you look at one of those IR statements that they released in an article maybe a month ago or so, it was pretty clear that he wrote a good chunk of it, if not all of it. Now, I don't know that for sure, but you can look at the style, and, you know, that's kind of what I do with my dissertation. So it's pretty clearly his hallmarks, or at least he was involved. So any last word on SOFI, and then we're going to talk just a little bit on BMNR.
Yeah. So SOFI and BMNR are trading about the same price, give or take, right? Within $1.
Yeah.
So I got 120,000 shares of BMNR. Average cost is 40. I had a dream, you know how, like, God spoke to some people during the dreams. I was like, I wonder if God was speaking to me, because I don't normally dream about the stock market. That's just not, my brain just never goes there. I dream about, you know, other happy stuff, if you will. I like to leave work 3 o'clock. I turn the market off, and I don't start looking until the pre-market. So I have a fair amount of time without having to look at these numbers and make sense of them. But I had a dream, Roy, that I sold BMNR. I did a live. I sold the shares live. I took the L live, over $2 million, $2.5 million, plus another million in options. So the largest loss of my career, twice over. And I bought shares of SOFI live with that money, and I titled it SOFI, Please Bail Me Out.
Yeah.
And it was my one viral stream, right? Like, because I don't have any. I think I got like 11,000 views is like my largest, whatever, the video that's been
Save me, SOFI.
So I just said, SOFI, please bail me out. And I transitioned the entire BMNR holdings to SOFI because I saw a path for a double with SOFI. It was like in the $19 range, $20 range in the dream. And I was like, I know that SOFI is going to get to 40. Is BMNR going to ever get back to 40, or is Tom Lee just upsetting a lot of investors with these, like, he's like the worst meteorologist of all time right now, but like people forget how good this dude is, like how amazing his acumen is, how connected he is on Wall Street, because we're very sensitive to the current share price, right? Like this is the only business where shares are inventory and we get angry when we get a good deal on our inventory.
Yeah.
You go into Walmart and you got to go buy some goods. If you're in the t-shirt business and you're using Costco or Sam's or Walmart to buy your t-shirt so you can go print your logo on it or whatever, and if they give a deal on those t-shirts, you're excited because now you got your inventory at a much better price, which is ultimately going to be accretive for your profits, right? That's how that works in a wholesale retail business. And that's how I look at shares. I'm like, I'm always liquid because I sell options. I collect more premiums than anybody on social media that I know of. So there's always money to buy the dip, if you will. Mm-hmm. So I'm like, I'm weird. I'm like, I kind of want the stocks to go down, not this much, but I do want them to go down in general so that I could try to accumulate more shares if that's the game that I'm playing right now. So I get excited for these types of buying opportunities, but it's like, SOFI's been going down for the last 4 weeks. Let's not talk about SOFI. And I'm like, dude, you realize that it's the same company it was when it was $32 a share. So I just, help me to understand that, Roy. I've been in this business since 1997, and this is the only business that people get angry when their inventory goes on sale, which is the shares. Like, why must you always want the shares at an all-time high unless you're just a person that the minute that you buy the shares, you throw all the possible money at those shares, your position is full. Like, I've been building my SOFI position for 5 years already.
Yeah, well, so it's just human nature, human psychology, and we all get a little bit spoiled when everything is ripping and going up. And that's when you start hearing things like, why would I invest in that company if it's only going to double in the next 2 years? It's like,
that's crazy.
Only double in the next 2. Okay. Waste of time, opportunity cost, a double in 2 years? That's a phenomenal opportunity. So there's usually signs and indicators, but we all get spoiled. Like even the most seasoned investors. What also happens too is a lot of people in that environment, they just keep buying more and more and deploying all their cash. And, I'm not saying every person needs to have a cash position. I usually do. And when I feel that we're getting closer to a local top, I'll usually just start adding and not buy anything there. Now I'm almost out of cash. I have like maybe $1,000 or $2,000 left to deploy, which is just from premiums and a little bit from X. Essentially, just if I'm buying something, guys, at this point now, it means I'm selling something. So that's a painful ride unless it's like a tiny buy, in which case I normally don't talk about those. But I mean, the other part is it's the opposite of where the market was 6 months ago. 6 months ago, it was really difficult to find an incredible buy. Now, there were some air test systems, maybe ASTS as well, where I thought, diamonds in the rough for air specifically. And it's treated me well. It's held up my portfolio really well, and I'm thankful for that. But now we're in the environment where there's not just one incredible buy out there. There's a whole bunch of them, and yet a whole bunch of them are also falling knives. I do see some people saying, hey, I'm going to wait for it to bottom out, for there to be some stability. And that's not a wrong approach at all. Cheap can always get cheaper to a point where it's silly. And I think a lot of the valuation on some of these things, especially the reason, is silly, but it can still go down. So when you have, instead of just one screaming buy or some good buys like 6 months ago, and instead you see like 15 opportunities, but your cash position is very small, that's really frustrating, especially when you've been in tech or crypto, and ever since October, it's been kind of rough. We're in a bear market in those sectors. So, and I think we're in crypto winter, which is one of the things that Tom Lee had actually mentioned today. I don't know if you saw that.
I made a post piggybacking off of your post where you kind of agree with him that it's a mini crypto winter.
Yeah.
So is mini crypto winter going to be the new meme called transitory?
Yeah, I don't know. I don't think so. I mean, like, even just like 6 months ago, people were, any person like myself that was saying not when, but not if, but when crypto winter hits, and oh, this time's different. Every single crypto cycle has been the same, where things have changed. Crypto adoption has improved. There's been a lot of regulatory stuff that has improved. I'm not saying nothing's different, but there's a reason why we see it as a cyclical type of asset. And so this is crypto winter. Mini hopefully means that we're closer to the end than the beginning. I think it's happened really since mid-October. I think by the second half, we'll probably be out on the other side. Yeah, Mike says, crypto winter is transitory. I like it. So I know your dream was sell BMNR, buy SOFI. It's just a dream.
Yeah, not financial advice, but Roy, if you were 120,000 shares deep in BMNR at $40, with the investment thesis still totally intact, because it is.
Yeah, it is.
Irrespective, because the thing is that's the price action. Like whenever shares go down and you're stuck holding the bag, the only person to blame is you. You bought those shares, right? Mm-hmm. Nobody put a gun to my head to buy these shares. I was buying shares at 50, 55. I was up $250,000 on this position. It was just supposed to be a little swing trade. My membership, my group got me all excited about it. I did it. And I was up $250,000 on a trade that I didn't think I was ever going to be in. And then I started doing research. It was the whole investigate thing, right? Stanley Druckenmiller.
Yep.
And I'm like, man, I'm up $250,000. This is great. I'm going to go make $1 million. Made a little whiteboard presentation on how I'm going to make an easy $1 million on MSTR and BMNR. And holy moly, that didn't work out yet. No. But now I'm like, I did research. I started going through the Genius Act, and I saw that the world's migrating to the Ethereum blockchain, or so it seems. And then this Clarity Act is a really big deal for crypto in general, which is kind of counterintuitive to me, because when I first got into Bitcoin in 2015, it was all about deregulation and the government doesn't need to know what I'm doing with all my money, and et cetera, et cetera. And it was kind of like us against the system, right? Like going against the establishment was what Bitcoin was in my mind in 2015. When I first dabbled, and Bitcoin was a few $100s a token.
Yeah.
But now it's like, no, we want the big boys playing. We want regulation. We want it's totally different than what I thought it was in 2015. And then now you got ETFs and the BlackRocks and all the big boys playing, right? So that being said, I just still feel like there's an understanding there. And I go back to Warren Buffett. I hearken back to things that he said, like, I stay within my sphere of competence. And that's why he's never really been big into tech, because he's like, I can wrap my mind around Coca-Cola. I can wrap my mind around the Hershey's of the world. He understood the whole Geico insurance play. So he stays within his sphere and it's of competence, and it's given him a lot of confidence, and he did well, better than most, right? You could argue that he's, at least top 3. You could argue that he's the GOAT when it comes to investing. So I feel like from a sphere of competence perspective, SOFI is a lot higher for me than BMNR is. But I don't have to understand something to feel like I can make money off of it, if that makes sense. Because my understanding is going to have nothing to do with how it all plays out, if that makes sense. Yeah. So my thesis is intact. I'm formulating it every day. I'm watching Tevis's does the roundup video on Saturdays. Tanner puts out one too. He's got a cool little cheat sheet that he puts out. You cover it as well. And there's the Wolf of Dubai. Like there's people in my algorithm that cover this BMNR, on a regular basis, and I'm grateful for that. I'm thankful for that. But that being said, not financial advice, right? I push my own buttons, and I'm at the level to where people don't really influence my decisions. I push my buttons and live with my results. Would you transition at these levels, or let's say SoFi takes another leg down to 14, 15, 13 in that vicinity? That I just feel like in my mind at some point, I'm thinking, okay, sell the shares, go buy SoFi, sell BMNR, go buy SoFi, and then still participate at the upside. Just go buy leaps on BMNR. That way you're still in there, indirectly, if you will.
Yeah. It's not now, but if BMNR stays where it's at, which is much lower when I bought it, premiums did help, by the way. But I would have to think. I've not thought about it, but there is a price, that might be 11, 12, 13 bucks with BMNR where it's at, where I'm like, hey, maybe I'll take some of this. Because again, BMNR and SoFi are the only two things in my swing bucket. And I've got a lot of long-term position in SoFi. Yeah. On that, by the way, when I was buying BMNR, I was telling people it's a 2 to 2.5 year swing for me, a longer than a typical swing, in case we need time to swallow a crypto winter. Well, here we are. Crypto winters don't last 2 to 2.5 years. So we'll see the other side of this. We'll see some upside. It can last longer, though. I'm guessing, but it's just a guess. The second half we come out of it. Depends on a lot of different things. So we got a couple of quick questions here, TJ. Maybe sure. 1 to 2 minutes on each of these. Swanson asked, what strategies do you guys use to ease the BMNR winter pain? For myself, it's tough to sell covered calls here. So I'm selectively doing that, and only with a small part of my position. I did do some today. I hadn't done in a little bit of while, but for some reason there were some that people had left free dollar bills out there. I'm like, well, it's not much, but I'll take it. Other than that, it's just holding and waiting for the other side of the crypto winter. There is a scenario where if things correct to the upside for tech and fintech in particular, and we see a lot of those rip, that I might sell some of those on gains, not right now, and buy some BMNR if it just stays right where it's at. If crypto winter lasts longer than that, it's hard to say. What would you say, TJ?
So I got 120,000 shares, and I sold 500 covered calls at $30, expiring in I think March 20 cycle. So those are already up like 70% or so. So I'm just trying to ring the cash register. I think I hauled in $22,500 in premium, which is a small consolation price considering we're down, almost $2.5 million on that position. And I've done that several times over. I think I've captured about $400,000 in premiums on covered calls. So I can't afford to just have those shares idle. There's not like a real dividend. I think it might be like a penny a share or something ridiculous. Like
big dividend,
it's not even noteworthy. But yeah, so I'm ringing the cash register, but I'm also doing something that is not recommended. Mind you, I've been selling options going on 6 years full time. I'm selling covered calls below my cost basis. That is just something that I don't even want to promote it. That's why I'm a little reluctant to even say it. But I am selling covered calls below my cost basis because I'm trusting in my ability to manage the trade. I could roll the position up. I could play the shares from behind if I need to. But I'm only doing it at the time, it was half of the position because I had 100,000 shares last week while on vacation. I accumulated 20,000 shares at like $20.08, something like that. And I am trying to get a full disclosure on a bigger crash. I am trying to get all the way up to 250,000 shares. If BMNR were to crash in that $12 range, because then it would lower the average down substantially into the low 30s, and then I would be able to exit half of those shares at 30. And I still have the amount of shares that we had, except instead of a $44 average cost, the average cost would be now at about $30. And then I would move those monies elsewhere and rock with 100,000 shares. So you guys may see a world where I have 250,000 shares, but I promise you I'm only long 100,000 of those shares. And I want to see the investment thesis play out, dude. I'm willing to be wrong here. In order to be right, you got to be willing to be wrong, right? So I'm willing to be wrong here. I'm willing to own it. I've lost money before. I'm hoping that this isn't the case, but I do feel like the world is transitioning, specifically Wall Street, the government is transitioning to the blockchain. And I think that Ethereum has a lot of utility. And I feel like that's ultimately they're going to get the biggest slice of the pie. I don't try to get too technical with it because I don't fully understand it. I leave that talk to the smart folks like Roy. But what are your thoughts on that? Because I did hear you say that your investment thesis is intact with BMNR, and you're basically a buyer at these levels as well, provided you can find the funds.
Yeah, the thesis is just Ethereum and continued institutional adoption, real world asset adoption, tokenization, AI and agentic AI as well. Even when you have like Robinhood's building the Robinhood chain, which is a layer 1, instead of just using Arbitrum, which is a layer 2, which sits on top of Ethereum. Stripe's building a layer 1. Those sort of things increase adoption as far as institutions for crypto, which, I mean, they're not built on Ethereum, but even those things are not really a net negative. You still see them dominate stablecoins. You see them dominate real world assets. You see them dominate institutional intention just because it's a very well established chain that's understood very well. Lots of developers, 100% uptime, and it's actually decentralized, unlike Solana, which I know Solana bulls might hate me saying that, but it's just not. That's the reality. So it's going to see increased adoption, which over time should lead, just because of supply demand economics, to upside. But in the short term, I mean, anything could happen. So yeah, I think the thesis is still well intact. I've always had a hard time predicting crypto price, but to be fair, it seems like Tom Lee also has as well. Although that's on the short term. On the long term, I'm not saying like 65,000 Ethereum or anything like that, but like even if we're looking at 2 years out and Ethereum's at like 8,000, 9,000 bucks, BMNR will be sitting at a pretty good place, especially from here. It's painful in the short term. I always thought there could be a crypto winter while I was holding it. And there's a high likelihood that I could. Kind of wish I had waited to buy as much as I did, but it is what it is. So,
me too. But I guess the mistake that I made was I felt like with all the ETFs and all the big money in crypto that wasn't there in the last cycle, I you got to admit your mistakes, right? I think that's part of maturing as an adult, as a human in general. Is I really thought that this time was different. Like I truly believed that narrative. I remember having that conversation with my wife. I really thought that this time was different, and there was going to be a real solid bottom. I thought the retracement would be maybe 25% for Bitcoin. It's retraced over 50%, I think, from the all-time high. Because I was like, well, how is it going to work with all this big money? Like this is just my thought process, right? I'm just sharing it with you guys, and evidently I was wrong, and I feel a lot of people were. And this is what's tough about investing, guys. Like I'm giving you guys a insight into the mindset because you guys are in this situation. I'm willing to admit it. I was more excited buying these shares in $40 at $50 range on BMNR than I was buying 20,000 shares at $20.08.
It's human psychology, and we're human. And
I was more excited buying them at a much higher price, even though this is a much better deal. Yeah. And it's just that's why this thing's so hard. That's why there's not a lot of people that have $100 million portfolios. That is something that I strive for down the road, and it's not easy to get there. I don't know if I will, but that's the target. That's the BHAG, right? That's my BHAG. I don't know what you guys is, but that is what I dream about every day while I'm working. And you got to chase your dreams while you're wide awake, right? That's the thing.
Yeah. I do see a couple of very specific questions. We're going to skip this one, Carl, but feel free to reach out. Follow TJ on X. Is in the description, but he's a good guy to follow. And oftentimes, if he has time, he'll answer your question. We don't have time for it, but I do want to ask this one as our very last question. TJ, did you always have this mentality, or just by going through all the market hard times gave you that mentality?
Yeah, it's a combination of life, man. We all have a unique story, right? But life's not been easy for me. I've gone through a lot of hardship in life, fallen down several times. I've been at rock bottom, and thankfully I'm grounded in my faith. So I just always feel like this life is just full of tests. And I always think 5 years from now, what am I going to think about today? So I have like this 5 year mentality in my mind. And if it's not going to affect me that much 5 years from now, I'm not going to give it too much thought today. And then I also played poker full time for a couple of years. So you have to be able to keep your composure in front of people right in front of you when things aren't going your way. So I feel like I've developed a bit of a poker face, and that's given me the temperament to deal with the ups and downs. And I grade myself a year at a time. So right now we're down for the year, but we also have a lot of outstanding premiums out there. And if those premiums all work out, we're at break even for the year, and then BMNR rebounds, boom, there's our profit for the year. So I always try to manufacture the win and find a path to victory, and I keep my eyes on the prize. I feel like I put on a real solid trade today with those 2,500 puts on SOFI, and I'll add another 2,500 if SOFI dips to that $16 mark, because now they're going to pay me a lot more money to take on the same amount of risk. So I'm super excited about SOFI at 15. I think it could get there, Roy. I don't think it'll stay there. We're talking December 2027, whenever these leap puts expire. I just think SoFi is going to have a 5 in front of it. You know what I mean? So I'm like, I'm going to be upset if I don't transition some of those premiums to buy leaps or take ownership of some shares, maybe swing trades some of the BMNR shares, and then rock with the horse that I believe in more. And it's only because I know it more, right? Like I know, and I think Tom Lee, I don't know him personally, don't know Anthony Noto, but if I had to bet my entire life savings on one of those guys, there's something about Noto that does it for me. You know, like he's my guy, right? Like he's my guy. I know he doesn't know that I exist, but he's my guy. Like he's my CEO in my mind. I'm a freaking, along with this Josh gentleman, I don't know anybody else that owns more SoFi shares.
So, Josh is the one in the room for sure. Glad you're here, Josh. TJ, thanks for being with us, and all of the audience, thank you guys for being with us as well. Again, if you don't follow TJ, he is on X at TJ the Will Deal. You can see his email address there as well. Well worth following, especially if you want to learn more about options. And as always, happy investing.